Hello traders, welcome to the channel again. Good morning everyone, or good afternoon. My name is André Cardoso. Thank you for being here. As always, it's a pleasure being here and sharing my work with you. And for today I want to cover just a couple of charts, just 6 charts that I want to share with you for today after those violent moves from last session from the Fed, creating some impact in the markets. So I just want to cover a couple of patterns that I think we may take some advantage from those same patterns. So let's start with the pound versus the Aussie. We have the neck zone of this head and shoulders pattern formation now under pressure. Actually, the price has broken the neck, so we do expect a move to the downside. We have the neck broken at 75 or 74.59. So I want to see more downside momentum for the pound versus the Aussie. This is a chart that I shared before with you before the breakout of this neck zone. So some of you may already be prepared to this head and shoulders pattern format for the pound versus the Aussie. So expect more downside momentum for this one. Dollar versus CHF, I shared also this one with you before. Actually, I shared this one yesterday, or the previous day, I'm not sure, Tuesday, I believe. I shared this potential shark pattern projected at 90.78. As we can see, we have the bullish pattern completed at that golden Fibonacci extension level. That pattern suggests a move towards the 50% Fibonacci level. As I said multiple times, we never know the outcome of a pattern. We know the default targets for it, but we don't know if the price will target those or if the market will fill those expectations. So for now we have the pattern completed at 90.78, and I do expect a move towards the 50% Fibonacci retracement level. Then we have the pound versus the Japanese yen. I shared also this one with you yesterday or on my last video, and I'm waiting to see the formation of a bullish 2618 setup, which is now projected at on hold, let's say, not project, but it's on hold at 157.80 or 157.79 if you wish. So that pattern depends on the double bottom printed before, and pull back to the 61.8% Fibonacci level will complete the pattern. We then expect to see a move to the upside after the formation of this sequence. Of course, I don't need to say that pattern relies or depends on the double bottom. Any move below this daily or weekly fractal support will immediately invalidate with this potential sequence bullish 2618 setup. Then I want to cover euro versus the pound, which is now also threatening major resistance. Actually, we are trading above the previous highs in weekly fractal, and taking into consideration the recent Fibonacci ratios presented between these major fractals or these weekly fractals between 88.97 and 87.21. Based on the ratios presented there, we can start to project a pattern above. Of course, I don't know if the pattern will work, but I assume that a clear violation of this resistance should trigger more momentum to the upside for euro versus the pound, and of course that may also help in the future to form this pattern later. So let's pay attention to, first of all, moves to the upside after breaking this fractal, and then at 0.9 we have this bearish crab pattern projected, which may suggest a retracement after completion. Then, and to finish with platinum and the commodities in general, but to finish with platinum and crude oil, platinum 1025 neck zone of a technical double bottom. The same needs to be said with if the price breaks below this double bottom. of course it will fail, it will invalidate the sequence or the expectancies that we create for the double bottom. For now, we just need to wait for a breakout or a clear breakout of the neck. So we have the neck at 10.25. I admit that the breakout of this structure or this resistance should trigger a move to the upside. The move is not the move is limited to a 2.2% move above the resistance, so we do not expect a big move above. But of course, this pattern as a reversal behavior may also act as a, let's say, the first trigger for a bigger move to the upside. I'm not saying that will happen. I'm not even sure if that will happen, but it's one of the possibilities. We have the technical double bottom. If the price starts to trade higher, that may be the first signal for a major move, as I said, to the upside. Also, let's pay attention for now to the fractal resistance and the next zone for the technical double bottom for platinum. Let's go on crude just to finish, and I also called your attention to this bullish shark pattern before, bullish crab pattern before. It's projected at 75.62, and we just need a new lower low on crude in order to complete that sequence. I will not be surprised to see crude oil finding some support at this ascending channel, this ascending channel support. We have a trend line approaching from below, so I will not be surprised to see that bullish crab pattern completed at 75.62, and then of course after the formation of the pattern we expect a move towards the 38% Fibonacci retracement. Again, this is not a huge move. We do not expect a huge move to the upside. We just expect a move towards a 38% Fibonacci level. So this is initially. So this is our first target zone. And then I have a second target projected at the golden Fibonacci level. But for now, we just rely on the first target, and that helps us to manage our stops also below the starting point of the pattern, or the completion point of the pattern, by the way. That being said, if you target 3.4%, that is the maximum risk that you can use. You are not allowed to use higher risk than the reward that you expect to take from a specific setup. So if you expect a reward or a minimum reward, initial reward of 3.4% on crude, you can try to minimize your losses and I always try to play a 1-2 risk reward approach when I play the crab pattern. I always try to play, if you trade for 3.5, you can try 1.5, 1.7, you can try 1.8% as your risk for this setup. The crab pattern does not require a lot to invalidate, so we just need to see the price trading below the golden fib, and that will start to threat the invalidation. So we just need to provide them some room to work for sure, but we don't need to use a 1-to-1 risk reward approach to trade that pattern. We can try to minimize our losses that way. Of course, if the price then trades the second target zone, that will help us to maximize our profits. But we must, before pushing a trade, this is the initial reward, and that being said, that's where the entire strategy relies on. So we target the 38% fib. Based on that reward, we can adjust our stops accordingly. We never lose more money than what we expect to win. And we repeat that process over and over again, assuming that if the price breaks below, that will invalidate the pattern. So we don't need too much, we don't need to provide a lot of room for the crab pattern to work. Usually the price reacts very close to this Fibonacci level, so we don't need to extend our stops. And that finishes our video for today. I hope you enjoy it. We will be here tomorrow, of course, but just for you to to pay attention to some of these price zones for these forex pairs that I shared with you today, and these commodities also. So I hope you enjoyed. Have a nice trading day, and I hope to see you here tomorrow. See you there.